Hey everyone, Chelsea Williams here with Core Solutions Group. We are helping law firm owners all over the United States get financial clarity through outsourced accounting services. What we would like to go over with you today, because we see so often that lawyers are not putting eyes on financial statements in their firm. So what we want to do today is to shed some light on what financial reports should you be looking at a minimum, and when, and what do these reports look like? And also, what questions should you ask when you're looking at these reports? So there are three core reports that you should be looking at on a monthly basis. The first one is your income statement. This is your revenue and expenses. The second is a budget variance report. This is your planned revenue and expenses versus what actually happened in a given month or time frame. And the third financial report you should be looking at on a monthly basis is your balance sheet, which reflects your assets and liabilities. So the first financial report that we're going to go over today is your income statement, also known as your profit and loss. This can come from almost any basic accounting software, as can the rest of the reports, and should be pretty easy for you to get your hands on if your books are up to date. So at the top of this report is going to list out your revenue, which is money coming in. And then below your revenue, you're going to see your expenses, or money going out. And more specifically, where your money going out is going. What types of expenses are you incurring? So when you're looking at your money coming in, you want to ask yourself a few basic questions to get started, just to get the wheels turning. And the first one is, where is my money coming from? Who are the people? What are the services? What are the locations, if you have multiple locations? Get very granular about where your money is coming from. You also want to look for high-level trends. There is some seasonality to some practice areas over others. Some have nothing to do with seasonality. Some people have trends and some people don't. You also want to track your return on investment on marketing. And so this is a great report to look at to say, are my marketing dollars paying off? And how can we track that in my financial reports? And then for your money going out, some questions you want to ask, again, is very simple. Where is it going? What are the expenses that you have? Do those expenses make sense? Are there high-level trends? Some of your expenses are going to be parallel to revenue. For example, payroll wages. The more hours worked, theoretically, the more revenue brought in. Or the more revenue that comes in, the more payroll wage expense that you are going to have to outlay in order to handle that extra revenue each month. And so this is an example of your budget variance report. This is the second report, very similar to the income statement, but what we're looking at here is, what did you plan for and what actually happened? Now this is where the really fun stuff takes place. I call this financial on purposeness. And what we want to look at on this report is, did we hit our mark? If not, why? If so, why? And what we would recommend is going 3 levels deep. So find 3 different levels and keep digging on finding out the why. Again, the more granular you get about looking at your money in a financial report, the more useful it's going to be for you in making decisions in your law firm. You also want to put spending controls in place. This report helps because it makes you aware of how much you're spending and where, and if you have other team members on staff that have spending cards, making sure that you have controls for that as well. Another valuable thing to look at when you are looking at an income statement is, what are your variable versus fixed expenses? So variable expenses are kind of like we were talking about payroll. The more money you bring in, the more payroll you're going to outlay in order to support and process and complete these cases and these revenue providing services that you're doing for your clients. That would be an example of a variable wage or a variable expense. Fixed expenses are things like office rent. Your office rent is not going to go up no matter how much revenue you generate, unless you're growing so quickly that you need more office space to house a bigger team, which is a good problem to have. Ask yourself, do these expenses look accurate? Do they even look right? You know, sometimes accountants and bookkeepers make mistakes. So if there's something that is miscoded, it's going to throw your budget variance report off. So this is also a good control to use for the accuracy of your books. Another question is, are you investing in advertising? Advertising is something every single business should be doing. nowadays, whether your market is local or you're online and virtual or traveling. That's something that you should absolutely have in your budget. Another question is, can you eliminate any expenses? We have this mentality of, in order to make money, you have to spend money. And that's just not the case in most instances. So are there any expenses that you can eliminate? Software fees that you can cancel. Software is a big one. A lot of us have shiny object syndrome with software. And so we get all these softwares and we don't end up using them, but they still charge us every month. It's still coming out of the bank account. So those are some things to look at as well. And you can get very, very strategic with a report like this, because it can also answer questions like, when will I have to hire my next employee? And what's that going to do to my bottom line in terms of cash? Now, another thing to consider outside of these reports are revenue breakdowns. So if you'll notice on our income statement back here, we have two line items under revenue. There's consulting income and there's interest income, and that's it. Now, depending on what types of software that you use, you don't want to create more work for work's sake, right? We want to work smarter, not harder. So if you're using a case management software that produces revenue reports, reports on the money that was brought in and breaking it down into practice areas, then use that software instead of creating more work in your accounting software, and it can be a separate report that you look at each month. So say you have a case management software and you get out a report and you can tell that based on the time frame of the report that 46% of your revenue came from corporate law, maybe 15% came from employment law, 17% from construction, and 22% of your revenue came from workers' comp law. So let's say those are your practice areas, and this is your profitability, or the amount of revenue that it is contributing to your top line. So another question, a very important question that you want to ask yourself when you're looking at the breakdown of your revenue is, where is your time in all of this? What are the time requirements in order for you to bring in each practice area, revenue in each practice area? Because just because a practice area brings in the most cash doesn't mean it is the most profitable. And now we're getting into very strategic analysis of practice areas and financial statements. But we're going to keep this one basic today. This is the third and final report that we're going to go over. This is your balance sheet. The balance sheet is not going to be near as useful to you as the others, but it is still helpful in a couple different ways. So when you're looking at the balance sheet, what you'll see is at the very top, your assets, you will have a section with that reflects the cash in bank. It's going to show all your bank accounts. All right, so what you want to look at in this, what we do when we pull reports is we pull a month-over-month report. More often than not, it's the current year month-over-month. Sometimes you'll want to pull a year-over-year comparison. That's that looking for the trends part there. But you'll want to look at balances over time. You want your cash to grow, right? You don't want your cash to be dwindling, because then something's off there. Something has to change. And also, it's good for cash management KPIs. So if you have a goal to put a certain amount of money away of your profit to reinvest it in the business via a project that you are going to get up the cost of a big project, or a big marketing campaign, or some goal that you have to use a large amount of cash on, you'll want to make sure that your cash is growing over time. Now, the second part of the balance sheet that is going to be most useful is going to be money you owe. So at the top, you have cash in bank and liquidable assets. And at the bottom is going to have a section where you're looking at money you owe. And so you want to look at that over time and make sure, theoretically, that that's going down, right? You want to be working towards paying off your liabilities and monitoring those, at least to make sure that you are chucking away at that month by month. So what this really boils down to overall is cash management in your law firms. That's exposing your numbers and getting more familiar with where your money's coming from, where it's going, and what the patterns are with that, and what more revenue means for each expense line, whether it means it's a parallel expense, a variable expense that is going to go up as revenue goes up, or down as revenue goes down, such as payroll, Or is it a fixed expense and you know this has to be paid every single month, even if we don't make a dime? These all have to be paid regardless. So getting more familiar with your numbers and your trends is only going to happen by looking at least these 3 key financial reports, and at least on a monthly basis. So if you can set aside just 1 hour a month where you're looking at these reports and asking questions and digging deeper and trying to get a better understanding of what your most profitable practice areas are and how you can leverage that knowledge and use it to get more of those types of clients that are going to yield a higher profit for you. So your firm does have identifiable cash flow patterns that you can use to implement a bank account budgeting system. It's also a great opportunity to comb through your expenses and get rid of dead weight. 8 times out of 10, this is software. We kind of talked about that. A lot of people are looking at a lot of software right now, and it's something that we can usually weed through and get rid of a few things. Check out our cash management for law firm guide. That is the cash budgeting system that we're referring to. And you can kind of see that system in play here in this balance sheet example. So this is an actual client. And if you look here, you can see that month over month, typically there is this upward trend of cash in bank. And so they're doing just really good at managing their money and making sure that it grows so that they can reinvest it for even more growth in their business. And you can see down in the liabilities are going down. So if you look at this cash budgeting system, what it does here is it has actual physical bank accounts that are allocated for a specific purpose. And you can learn more about exactly what that bank balance budgeting system is and how it works, and how you can crunch your actual numbers and create this cash management system for your firm. So another thing we want to talk about here, the whole point of all of this is to be proactive about planning and cash management in your firm. So, as opposed to reactive. So whereas, your books aren't current, a proactive would be your books are current. If you don't have any due dates, start setting hard due dates. If you're doing the books yourself, if your books are not getting done at all, or if they're behind due to you or someone else, it's probably time for a change. It's probably time to invest your focus on finding a way to get an accounting system and an accounting flow that produces these reports for you monthly. Because if the books aren't getting done, or the books aren't getting done right and in full, then your financial reports aren't going to be accurate. And you're going to be getting the wrong financial picture of where your firm is and the wrong idea about where it could go. If you don't have any reporting, proactiveness would be detailed reporting. So not just spitting out a generic report that doesn't really tell you anything, but getting the report or a couple of reports, if you have the case management software revenue report and your P&L, for example, getting those 2 reports in the same place at the same time and looking at them and analyzing them. Okay, and having that time of reflection every single month where you're looking over these financials and asking yourself questions about why they are the way they are and how you can change them in the direction that you want to change them. Also, not having a budget. If you don't have a budget, be proactive and put a budget in place and get some accountability for your cash management in your firm. So this is the overall idea of being proactive about your company's financials and all of the benefits that it can give you in doing so. And of course, if you're in a position where you need help and things aren't where they should be, please reach out and give us a call. We'd love to help you out. I'll have to edit the end of this too.